Okay, I know what you're thinking. That title sounds harsh, maybe even a little nuts. But what if I told you that for a whole lot of people, not buying a house could be the single smartest financial move they ever make? Today, we're going to break down exactly why that might be true. You know the feeling, right? You're just trying to get your coffee and your coworker corners you to talk again about their new house. They're dropping words like equity and investment, talking about how they're finally building real wealth. It's the dream. Well, hold on. What if your coworker, the one with the brand new mortgage, is actually the one just lighting a pile of cash on fire every month? We're about to flip that whole idea completely on its head, and we've got the numbers to prove it. All right, first things first. Let's talk about what everyone thinks they know. The conventional wisdom, the story we've all been told about why owning a home is the ultimate financial win.
It's practically gospel, isn't it? Buying a house is how you build wealth for the future. And renting? That's just throwing money down the drain. A mortgage is an investment. Rent is a waste. End of story. Or is it?
Okay, so let's pop the hood on that shiny new mortgage your coworker has and see where their money is actually going, especially in those first few years. So check this out, $3,670 every single month, that much of their payment. Just poof, it's gone. It's not paying down their loan. It's going straight into the bank's pocket as interest and to the government as taxes. You never, ever see that money again. And then there's this number, $330. That's it. That is the tiny, tiny little piece of their entire monthly payment that actually goes toward owning more of the house. That's the equity they're so excited about. When you put them side by side, it's kind of shocking, right? Look at that huge bar of money just vanishing every month compared to the tiny little sliver of actual investment. This is the part of home ownership nobody likes to talk about. So let's be super clear about what interest is. It's not some magic investment fund. It's just a fee. It is literally the price you pay the bank for the privilege of borrowing their money. It is a pure cost, just like your rent payment. And that fee, over the life of a typical 30-year loan, it adds up. We're talking nearly $500,000, $480,000 that you hand over to the bank for nothing. It adds zero value to your home. It's just gone. Okay, so if that's the homeowner's journey, what's the other option? Let's talk about the renter's path, and not as a consolation prize, but as a seriously powerful financial strategy. We have to stop thinking about rent as wasted money. It's not. Think of it as what you pay for something incredibly valuable, financial flexibility. It's freedom from interest, from property taxes, from fixing a leaky roof at 2 a.m. And the strategy here is ridiculously simple. It's just 2 steps. 1, find a place to rent that costs less than what a total mortgage payment would be. 2, take that difference and invest it every single month. That's the whole game. All right, it's time for the main event, the big question. What does this look like after 30 years? Let's run the numbers and see who comes out on top in this head-to-head showdown. So we're not talking about a get-rich-quick scheme here. This is a 30-year marathon. We're going to follow both paths from day one, right at the beginning, all the way to the finish line, 3 decades down the road. And here we are, the final results. On one side, we've got the homeowner who did everything the right way. On the other, the renter who took a different path and became an investor instead. And wow, the results are just staggering. The homeowner, yeah, they paid off their house, which is great, but they also gave the bank $480,000 in interest that they'll never see again. The renter, by investing that difference month after month, they've built up a portfolio worth $2.4 million. And that's liquid money, not wealth trapped in a single property. So what's the big takeaway from all this? Well, for one, renting isn't a failure. It can be an incredibly smart way to build wealth. And that equity everyone talks about, it's not as simple as it sounds. The real hidden cost is something called opportunity cost. It's all the amazing growth you missed out on because your money was tied up paying interest instead of being invested. And that leaves us with one final thought. We spend so much time thinking about where home is for our lives, but maybe we should also be asking, what's the best home for our money? Is it 4 walls and a roof? Or is it something else entirely, like real financial freedom?